We spoke to Pralay Mondal, who is the MD and CEO at CSB Bank, about the margin guidance and the outlook going forward. Listen in.
If I have to look at it on a year-on-year basis, the net interest margins have narrowed, but somewhere it's within the guidance that you had given in the first quarter of FY26 as well. What is it going to look like in the second half of FY26 from here on and FY27 now?
Good morning to you and your viewers. Yes, I think this is in line with the guidance which we had given in the first quarter that our NIM had bottomed out and we have significantly improved from there. I think we should be broadly remaining in this range this year, and hopefully FY27 we should be inching towards the 4% kind of NIM, aided by, of course, the deposit cost will stabilize. And of course, NIMs are also coming down. It also depends on what kind of rate cut plans RBI has for future, depending on various other high frequency data which is there. But broadly, we should be in this range.
Okay. To add to this, what is the repricing and how much of repricing of high-cost bulk deposits is anticipated from here on? And what will that impact be when it comes to cost of funds?
I think the bulk deposit repricing is already happening. The fresh deposits which are coming in is coming at a much lower rate than what it was coming when there was a significant negative liquidity in the system a year back. Having said that, post the rate cut, while it came down, right now it is sort of stabilizing on certain parameters. It's inching up also. So I think till we have more clarity on the overall liquidity scenario, which is kind of a swinging between positive and negative at this point of time, the bulk deposits will remain in the same range at this stage. However, because repricing is happening even at this level, the overall cost of funds should start coming down. So that's why we think we have a positive play on the margin. Also depends on how the MCLR and the EBLR plays out from here and how competitive the markets are on the asset side, so pricing on the asset side. So it will depend on a lot of factors. So that's why we are holding it to where we are. I think we should be able to manage that.
Okay, but Pralay, initially also you've mentioned that the cost of funds will start declining in the third and the fourth quarter, and I know you're reiterating a similar aspect. But by how much are you anticipating the cost of funds to then come down?
It's a difficult question because we are in such a volatile global scenario. And who knew that liquidity will be where it is today, around 2 months back or 3 months back. Of course, inflation is coming down. That's the good news for us. But there are global factors which are not completely in our control. So we'll see how it plays out. Given that, I think broadly the spread between the asset pricing and the deposit pricing effectively coming down should remain similar from now onwards. So I don't see too much of an uptick from here purely based on that play. Of course, business mix and other things. For example, we have a EBLR book and MCLR book which is around 40%. Fixed rate is 60%. So gold loan book is almost 47%. So all of that will play out. So that's why I'm pretty positive that we should be able to hold at these levels, if not better.
Okay. Moving on, gold loan, a strong growth is what you've seen around 37% if I see year on year as well. And that makes a significant portion of your loan book. Now, what is the way forward when it comes to this segment? Because, you had initially stated as well that the plan is to reduce the gold loan share going ahead by 2030. So what is the near-term strategy going to look like?
So I think that strategy was FY28 onwards because we are investing significantly into technology. And as we are talking, we went through a major transformation of moving our surround system along with the core system migration to FC. We did 52 surround system migration along with Oracle systems. So I think all of that will help us in building the retail. Retail is a long high road journey. And it will start from next year, and hopefully it will start showing results FY28 onwards.